have the chance of having with us today Mr. Megumi Kiyozuka of Sunrise Capital. I'll just introduce him. Prior to joining Sunrise Capital, Mr. Kiyozuka was the director at Carlyle Group Tokyo, where he has focused on Japanese buyout opportunities in the consumer, healthcare, and industrial sectors. He is joining us now. Are you there, Mr.?
Yes, I'm here.
Great. So thank you for joining us. I'd like to start a little bit on the. We've had a lot of announcements. You know, your former colleagues at Carlyle announced that they're looking at 300 businesses. We know Euraseo opened a Japanese Tokyo office. But with you, I'd like to understand more. We want to see the local players and what the local players are thinking more than the international ones, I would say. So, as I mentioned, Sunrise Capital, you're focused on the mid-cap segment. If you could tell us, for you, how the competitive landscape presents itself in Japan in terms of deals,
sure,
I would say.
Yeah. I understand the competitive dynamics in Japan is pretty different between the large cap space and the mid or small cap spaces. Typical winning price for the very heated auction transaction in large cap space is actually 13 to 15 times of EBITDA. On the other hand, that of mid cap is typically 7 to 9 times, nearly half of the large cap prices. Because, of course, one reason is the demand and supply in each of the caps. But another reason is that the typical seller of the large cap is a listed company, which is bound by fiduciary duty to the public equity shareholders. So they need to maximize the selling price by hiring the powerful investment banks such as Goldman Sachs and Nomura, and host the full-fledged auctions, inviting 200 buyers and try to stretch the winning price. On the other hand, mid-cap space, most of the deals are succession deals, and the sellers are founders, in other words, irrational individuals, and most of the deals are intermediated by the MA intermediaries, who often invite only 3 to 5 potential buyers. And once we win the competition among 3 to 5 potential buyers, at the first round of the process, we are granted full exclusivity into the due diligence and the negotiation with the sellers. So there is a room to enjoy the arbitrage opportunity in the mid-cap spaces. And another observation is that most of the GPs are trying to grow very rapidly in terms of the fund size by taking advantage of the current strong interest among a global investor into Japanese private equity market. So many of our ex-competitors are currently managing the 2 times, 3 times, 4 times larger fund size, except for us. So previous competitor turns out to be actually buyer of a portfolio because they are pressurized by LP to deploy the capital. Those are the observations I have in terms of the private equity market in Japan.
It's very interesting. So you confirm that it's a much more competitive landscape today, and so for you, when you're about to deploy capital today, there's macro changes, new developments globally and domestically in Japan. So where do you see opportunities? Which sectors are you most bullish about, and which are the ones that you pursue the most?
Sure. At this moment, any type of sectors, any kind of companies on sale. So the different from 25 years ago, all sectors are our target. But among them, I personally believe that the businesses or sectors providing a solution to the major Japanese social issues are most attractive. Now, let me pick up 3 major Japanese social issues. One is the aging society. Second is the labor shortage. Third is delay in the digitalizations. Therefore, I tend to like elderly care or pharmaceutical medical equipment companies for the aging society. And the labor shortage, we tend to like the outsourcing or temporary staffing businesses for digitalization, the system integrator, and IT consulting companies. So we have been investing into those sectors repeatedly and generating quite a decent returns.
And so currently, as you just mentioned, which is there a particular deal that you're looking at? Let's try and grab a bit more attention. Is there particular deals that you're looking on, and what sizes, I would say, would you look if you talk about the mid-cap buyout sector? What are the sizes compared to other geographies?
We tend to look at the enterprise value of the $50 million to $300 million range. That's what we define as a mid-cap in Japan. Particularly, we are focusing on lower end of the mid-cap, which is $50 to $150 million. So the revenue is like $100 to $200 million, EBITDA $10, $20, $25 million. That kind of companies are typical target for the mid-cap players like ourselves.
And today, we're seeing on global markets with the rise of interest rates, sort of a different dynamic. We see longer holding periods that are being put forward by GPs, in Europe or in the US. Expectations are a bit changing with their on the holding period. Is it the same, you think, in Japan on the new deals that you're moving into, or is it much more dynamic today?
You're asking the impact of the interest rate?
Yes, partly.
Okay.
I'm asking, we're
Okay.
noticing sort of a change in holding periods, I would say. If you go to
Oh.
any conversation, holding periods of portfolio companies is stretching for different reasons. Some mentioned the interest rate increase. Other mentions, a lack of exit opportunities. Do you see the same at the level of the mid-cap buyout sector in Japan?
Sure.
Holding periods that will extend?
Right. I noticed that the holding period is getting longer, even in Japan. But compared to the story in the United States or Europe, Japan seems to be much better. For example, last year, Sunrise had the 7 exit and distributing more than $400 million, which is the same size as our fund size. So it depends on which GP you're talking about. And some are slower, but some are very actively distributing the returns.
Well, that's good news for LPs, because many are complaining in other geographies about having their money stuck and not getting back their returns. I would like to follow on. Sunrise Capital, you just spun off and you just raised 500 million, and so what is the LP appetite today that you see, and what strategy does that imply for your spin-off?
Sure. I have been involved in private equity business and the fundraising for 25 years, and this cycle is amazing. As you mentioned, we have just closed first and the final fundraising of our fifth fund, Sunrise Capital 5, hitting the $500 million hard cap. But we noticed that excluding any potential investor, because we didn't go for any roadshow, just as far as we noticed, we received more than 4 times of demand. So we had to apologize to decline the interest from the new investors. And some people blaming us that we are crazy, that we're not accepting such a strong demand. But there is a strong reason behind this. We believe that in order to achieve the 25% IRR or higher, gross IRR or higher, or 3 times return or higher, we need to stick to the low end of mid-cap. And we believe that's the most attractive sector. There are lots of inefficiency or arbitrage opportunities, and we are selected by non-price factors and so forth. That's why we declined lots of demand and stick to the less than $500 million fund size. That's our strategy. And this seems to be strongly supported by the existing LPs.
You mentioned the IRR, so I have to jump on something because we're seeing also a change in how LPs, look at their GP relationships, and there's a big debate now that there needs to move from the IRR perspective towards a DPI. Do you feel the same on the Japanese market and with your institutional or other type of LPs?
Right. You're right. The DPI is more important. The multiple DPI is most important, and next the multiple, and lesser to the IRR. So when we distributed $400 million last year, the existing LP really, thankful to us, and really highly appreciated our, timely exit and distributions.
Yes, I can imagine they should be happy to get money back in this global environment. So now I also wanted to see with you is that you mentioned the macros of the market and how it pushes forward your own investment strategy. On the long-term macro level, there's a lot of you mentioned an aging population. There's a lot of talks in foreign press about a decline in population in Japan. Do you see that as a long-term risk for being able to extract good returns from companies, or do you see this more as an opportunity to invest in proper domains?
Actually, the both to your questions. If your portfolio was mediocre strategy managed by mediocre company, mediocre management teams, I think the such a headwinds, declining number of the children and so forth, very significant risk for for example, education industries or bridal businesses, but less people get married. First of all, small number of younger peoples and so forth. However, even such a declining sector, there is always winner. So that case, if we could pick up a very strong winning company in the declining sector, we take this as an attractive investment opportunity because our entry valuation tends to be very low. So the answer is yes, that is a huge risk, but also generating a very attractive investment opportunities as well.
And so you mentioned that on the opportunities that you look, the role of intermediaries on the market. Do you see a more competitive landscape going forward, or are there like in certain domestic markets like in France or Italy, the usual potential buyers for companies? I mean, how do you see that moving along?
Long term, yes, I think even the mid-cap or small-cap space in Japan should be more efficient. In other words, it is getting more difficult to enjoy the arbitrage or inefficiency-driven investment approach. Having said that, we have just closed one education company, and we are working on one the IT consulting company investment opportunities. Both are completely exclusive opportunities, actually approached by the company side, company management or founders, because of our track record in the same sector. So among the GP, there might be a winner and a loser. No any specific age, any track record. It is getting very difficult to generate superior return. But if you have a deep track record, as unique investment strategies, I think you can be a winner.
And so you mentioned that the companies are reaching out to you. And so what type of support do portfolio companies expect from a GP in Japan? Do they expect only capital, or do they expect more into enhancing their processes, digitalizing? What type of support is expected when a company brings in a PE investor?
Sure. We have a two-step approach. The first step, we have the Sunrise standardized support. And often the case, we second our junior and middle professional to each of the portfolio. and crystallize or improve the quality or risk management of a company. Most of the small SME companies in Japan, family-owned companies, don't have the long-term business plan, don't host a monthly board meeting, not audited by the auditors and so forth. So we have to implement those, the minimum management infrastructure into each of our portfolio. It will take usually 3 months to 6 months or 100 days. Once that is completed, we move to the second step, which is a growth initiative. Could be a roll-up acquisition, could be the expansion into Asian market, overseas market, and so on, so on. We go for those 2 steps, and we usually complete our support 3 to 4 years.
Okay, so it's interesting because we have an image of Japanese businesses to be very organized compared to, I'd say, some countries in the Middle East. So to know that there too, sometimes they don't do their board meetings, and it's kind of reassuring, and it gives us a way forward to progress. And it's also for you a good way to add value, I guess, for your portfolio companies. How do you manage, to balance your portfolio? I mean, within your firm, do you look at, you have like benchmarks for certain sectors, certain activities, or you're mostly opportunistic within the domains that you mentioned?
We don't have any one unified standard or criteria, but we spend a significant amount of time in the due diligence phase together with outside professional consulting firm like a Bain Consulting to analyze and create what should be the midterm the criteria we should achieve in terms of the risk management, in terms of growth initiative, in terms of the profitability and so forth. And we monitor every month, every week. And if things are going well, we will continue. If not, we try to change some strategy or even the management teams so that we can catch up with the original plan.
All right. Megumi, thank you so much for your time and for this really good snapshot on the mid-cap buyout sector and the strategy of Sunrise. I mean, knock on wood, it's a good position to be refusing LP money in these days. So you must be doing something very well. So thank you so much